Hello, Stephen Kouk Koukoulas here, Economic Advisor to Maxim Advisory Services with our update on the economy. Now, where to start is always the interesting thing. Look, I think there's some encouraging signs in the economy. We've got household spending starting to lift, so we consumers, that's you and me, we are starting to realise the benefits of the lower interest rates. We've had 3 interest rate cuts since the start of 2025, and they're starting to feed into our cash flow, our mortgage repayments, and that's encouraging a little bit of spending. We do know that inflation is lower and wages are a little bit higher. Not massively so, but we're seeing real wage increases. That is, wages increasing by more than inflation. That increases our purchasing power, and that's feeding into household spending. So I'm not saying that we're in a household spending boom, far from it, but the better news on household spending is starting to come through. The other good news is that our export sector is doing better, that we've got signs that with interest rate cuts around the world, we've had lower interest rates in China, in the UK, in the US, in Canada, in the Eurozone. A lot of economies have cut interest rates, and that's seeing the global economy pick up. Commodity prices are lifting. They're still a little bit below their peak levels of 6 and 12 and 18 months ago, but nonetheless there's signs in the world economy that things are improving. That's good for us. It's good for the Hunter region, of course, heavily dependent on mining, and of course with the global economy picking up, it adds to tourism too, which is an important part of the whole economy. One area where there's this dilemma, I suppose we could call it, is house prices. They are still increasing. If we look at the totality measure of house prices, they're going up throughout the country, certainly in Sydney, regional New South Wales, they're increasing at a pretty steady pace. There's a shortage of dwellings, as simple as that, that there's not enough dwellings on the market to meet this ongoing demand, partly from higher population growth, but also because there's been a shortage for many, many years. And now that we've got lower interest rates, this is sort of catching up, if you like, and we're seeing this house price lift coming through. So if you've got a house, great news. If you're a first home buyer or looking to buy a house, that's a bit of a concern. But nonetheless, higher house prices do feed into the wealth effect. The Reserve Bank Governor, Michelle Bullock, noted that in her recent speech. So when we're feeling wealthier, we also tend to spend. Another reason why household spending's looking just that little bit better as well because of that positive wealth effect. In other broader news, the inflation decline has probably petering out a little bit. And by that I mean that, remember, it was only like 2.5 years ago. We had inflation above 7%. That was the true cost of living crisis. That was the real concern for many of us, frankly, including the government, including the Reserve Bank. Okay, inflation's fallen to around about that 2.5% to 3%. Remember that the RBA targets inflation at around about 2.5%. So we're almost there. We're only a few tenths of a percent from getting there. So we've just got to see over the next couple of months, the next couple of quarters, confirmation that the inflation rate's at 2.5% or a little bit less if we are to see further interest rate cuts. Now, I still think we will. I still think the economy, while it's looking better, is certainly not strong yet. We need 1 or 2 more rate cuts just to give that final impetus to economic growth. And on that final point that I'm going to make today, the labour market is still softening. I suppose that's the adjective I would use. The last 4 months of employment growth have been pretty weak. Compared with the start of the year, the unemployment rate's gone up from 4% to around about 4.25%. So again, not bad, but just edging up a little bit, and any further increase in the unemployment rate, if we are to see that in the months ahead, certainly fits into the scenario for lower interest rates. So for the here and now, slightly better economic conditions, led by the household sector. The economy better, but not strong yet. Probably more rate cuts to come in the months ahead, although they're going to be pushed out rather than happening soon. I think that's the story from the Reserve Bank. And for the New South Wales, the Hunter region, pretty decent economic conditions there. It does depend what business you're in. Retail's still under a little bit of pressure. Housing construction's likely to do better over the course of the next 12 to 18 months. But all in all, we're better now than we were a year ago. Let's hope this time next year that we've got a fully fledged economic recovery, lifting all businesses, lifting all consumers, and that I'll have a great chance to talk to you in the months ahead about that. So for Maxim Advisors, this is Stephen Kouk Koukoulas signing off. Thanks very much.